Welcome, everyone, to today's episode of our podcast. And today we're going to talk about a smorgasbord of a few things from legalizing and structuring your business, not from a foundational standpoint, but from a transitional standpoint, I think more so. Your personal wealth planning and just how to propel your seven-figure business even further and scale to a place where you're not the person who's the bottleneck, I'll say, in your business. So it's basically a guide for the seven-figure women business owner who wants to integrate financial strategy, legal protection, and wealth planning all into one cohesive framework that helps us support the sustainability and growth of your long-term success in your business. So I'll kick things off. I am Kellé, your fractional CFO. I feel like these podcasts we do intros and sometimes we don't because they're kind of at the top. But for some reason, I kind of want to talk a little bit about our expertise, Patrice and Karla. As you guys, I know at the top of this, we did a brief intro. But let's talk and dive into like our expertise in different areas, explain our roles so people understand why this is relevant to them and how we could serve them in these areas. I'm Kellé. I am a fractional CFO. So I work with women business owners like you to help you scale your business in a way that makes sense for your financials. So long gone are the days where you just need a bookkeeper in your business. You need a CFO that's in your back pocket that's helping you guide you to financial strategy, not just business, but personally, so you can begin to make that pivot in exit planning or transition planning, as Karla likes to call it, in your business. So I think that's a great transition, actually, Karla, to you to talk more about how you serve women business owners.
Yeah, I'm Karla Ukman, and I work with women just like you that are making, seven figures. And the main concern that I always hear is, well, I focus so much on my business that I forgot about my personal finances. And everything is always intertwined. Our business and our personal money is intertwined. And so what I do is I help on the personal side of things, making sure that you're paying yourself enough to reach your money goals, whether that's transitioning out of your business, full retirement, purchasing real estate, or sending your kids to college. All of those things affect you. And we want to make sure that your business is producing the right amount of money, but also you're paying yourself enough and we're not exposing ourselves to unnecessary taxes. And legal implications that can happen on our personal side, we got to take care of those. And that's why we have Patrice here. So Patrice, will you introduce yourself?
Hi, thank you. I'm Patrice. I help executive leaders and organizations turn legal compliance, like Karla is talking about, from a cost center into a growth driver. And a lot of people think legal and think, oh, we're just sending money out. But it's not just about protection. It's about how your business grows, the pathways that you're taking, and some of the things you should consider regarding that process. So that's some of what we're going to get into with this conversation. But I do so by streamlining your operations. We reduce litigation risks and we improve employee relations. So I allow you to have an employee-centric organization that is going to build to a long-term success and expansion. So this is where I come in, and we're not just a no center. That's what some people look at legal as, but we work with you to make sure that you're growing the way that you can optimize your profits.
So I think this is the importance of the three of us getting together, because people often know that their personal business and their personal and their business intertwines, but they don't understand. I know for me, I have a strict no commingling clause in my contracts, but I realized that means no commingling in your business finances. But when we talk about finances and I'm talking to the CEO entrepreneur like yourself, it's natural. It's a natural graduation of conversation that we start talking about your personal finances. So the three of us are like a very good, I guess, I was gonna say something that probably wouldn't have been right for the podcast, but I was gonna say we're married, but that would be a threesome. So I don't know if that's right.
That is another topic.
That's for our different
I
podcast.
know.
I'm sorry. It's totally not a threesome. But
It's a polyamorous situation.
polyamorous, non-monogamy.
An ethical non-monogamy. ENM.
It's
That's
very
what we do.
ethical.
Mhm.
And it actually helps you to grow in a whole lot of different ways. Personally and in business. Hilarious.
Oh my
Wow.
That's
But
why you guys will grow to love the three of us. Like it's
Yep.
a real live conversation that does stuff like this, and you never know where it's gonna go. Oh God. So actually,
we together.
Oh gosh. So actually, I think I want to deviate a bit. And Tracy, I want you to talk more about that legal structuring and how they safeguard their business and their growth in their business, and I don't know how it protects them personally too, because I think people don't understand how to not only protect but how to be proactive in protecting, because we know lawyers are here to protect us, but many people think, oh gosh, I got in trouble, contact counsel or contact an attorney. How do you work with them before they even get there?
So working with me, we try to make sure you don't get into the, oh shit, there's trouble, right? And that's where and that's why people see us as a cost center, right? Or see legal as a cost center, because we only come in to clean up versus sitting at the table with their clients. So like with me, I want to meet with my clients, on a monthly basis. Let's talk about what you're doing. Let's talk about where we're going and how we want to get there. So I have a client that they are operating in a particular structure now, but there are things that they're looking for and grants that they're looking to get. And so, and other organizations that they're looking to help in their process. So we're like, okay, let's talk about doing a 501c3 instead of where you are now, or creating an additional 501c3, because that's going to open more doors for what you're looking to gain in terms of the grants and funding, and the projects you're looking to take on, because your current structure is actually limiting in what you can do. And there's certain reporting that you have to do under your current structure that you may not necessarily need to do as a 501c3. But it is something that it's because I got involved in those conversations, right? They have a business, they have their organization that's running at this point. It's a multi-million-dollar organization. So know that they want to do more, right? And it wasn't waiting until they got to that stage of, okay, now we're ready to do it, or we're starting to do it, come legal, oops, we started doing this and we got some money and we need to make sure we're actually allocating it the way that we're supposed to allocate it. So, that's from an organizational standpoint that wanted to take on more of a charity, type approach with what they're doing. For business, the same thing. We've had businesses where they start out as an LLC, and you can stay an LLC for however long you want. But then when your business starts getting to a particular point, I've had individuals where it's like, oh crap, now we are in, the seven figure, and they had been pouring in, to your point with commingling, they've been pouring in their own money into helping that business along and not necessarily having the correct documentation. So, some of that conversation is this a loan to your business, or is this an investment? And do you have the right documentation showing that? Oh, now your business is at a stage where it can pay you back, or you can start taking a salary, even if you don't want that money paid back. Do we need to change what your structure looks like? And that's where, I put it off to, to Kelly's, but it's having those conversations like, here's where you should start thinking about what that structure looks like for you. And where you want to go with it. And like the last portion, your contracts. That's always going to be my thing. What does your contract say versus how you are operating? And kind of, again, let's talk about what your operation is, because a lot of people, they get the initial foundation set up with an attorney, they have their operating agreement, they may even have template contracts that they're using, and they may have tweaked little pieces here and there depending on the client that they're working with, but they have not had that overall review of the contract to make sure that things actually align, because tweaking one piece may end up conflicting with something else, but you're not necessarily thinking along those lines. So that growth portion is having someone by your side that understands litigation and what certain things look like in litigation, so that we can avoid that as you are going through as you're going through your business, and we don't worry about it. But in terms of kind of transitioning back to either yourself or Karla, when we talk the S Corp aspect, or maybe you want to go full C Corp, right? It's a matter of what's going on with your business and the numbers, and what's going on with you personally and your numbers, to see, is it that time, to make that transition.
Yeah, I love the fact that you mentioned that piece of it too, because it's something that I see in my role as their fractional CFO. And one day you guys will see our special guest, Kellé, who is my because I just could I can't do this with a serious face, knowing that she's right here and you guys see her like all on my lap, all over the place. But anyway, so she'll be 1 in 2 weeks actually.
Oh, dang.
Yes, so she is a almost 1 year old Cavapoo, and she's I didn't know what do they call them? A Velcro dog. Have you guys heard that term?
Yes, like a
dog.
Velcro child too.
Yeah, yes. He's definitely a Velcro dog. Like he has to be either at my feet or just under me all the time. So anyway, I digress. She's just
that's
always,
a cute term.
yeah.
Back in my day,
Yeah.
it was like, put that spoil ass child down.
Yeah. It's a Velcro child or a Velcro dog.
Not that I listened, but
Exactly. And then we complain because they're spoiled, right?
Yes.
So anyway, so that is what I see in our 7-figure business women, is that they have grown and propelled their businesses financially, but they didn't go back and look at that foundational piece, like you were talking about, the contracts, the way their structure is. And also, the first thing I usually see is either larger amounts in owners distributions or shareholders distributions, what depends on how you're set up, what that looks like on your financial statements, but also amounts in owners investments. And usually their prior accountants never addressed those things with them. So they didn't talk about either the fact that they were putting certain things in owners investments and or what was the plan to pay yourself back. A lot of times people never even thought about paying themselves back, They just started in the
They do that struggle life.
Yeah.
Right?
Yeah. And they were like, they never considered it. And now they come to me and they have a CFO in their corner. And I see this money in owners' investments that's dated like 7 years old. And it's like, so what were your intentions for this? And they have no clue. They're like, oh, I didn't even know that was there. I can't actually pay you can't pay yourself back, right? But those are important conversations that we do have with them in our monthly fractional CFO sections to help them come up with a roadmap on what does paying yourself back look like. It is possible. I have one business owner now. She's in I think this is year 8 for her. And she had about $20,000 in her owner's investment line item. And her business is doing well. She's at about 3 million now. And she could literally, the way that she's so leanly structured that she could pay herself back in one payment if that's what she wanted to do. But we came up with a plan to help her realize, okay, you can do that, but that makes sense.
What you wanted. Yep. And when you're paying yourself back, do you want to have an interest there, right? Like a lot of people don't even think about that. Just like how you'd get a loan from a bank, they go get, they're going to charge you interest for the use of that money. Do you want to do that as well? Can your business afford to do that? Right.
Yeah, and so to that point, we talked about she wanted to buy a car for the business because she does a lot of project management work now, and she's
Mhm.
hired project managers to work for her, and they're, running up mileage and all those things. So it makes sense for her to buy a company vehicle now. So we talked about like buying that vehicle versus paying yourself outright of this money, or do
Mhm.
we lease this vehicle? Do we purchase this vehicle outright? How's your business credit? These are all big things that business women owners never think about because we're in the grind of the day to day. And
Mhm.
usually started your business solo. So you're so used to running in a certain way. And while you're no longer solo, you still kind of have solo mindset in certain areas. And I feel
Mhm.
like that financial management piece, because it's usually the beast that no one really wants to tackle, especially for
Mhm.
these women business owners, because they're successful, right? They have money
Mhm.
in the bank. They're not robbing Peter to pay Paul. They know the money is coming in. So they're like, oh God, financial statements. They don't want to read those things. So
Mhm.
they wait until tax time, and then they get their tax preparer, and they're like, "Oh my God, I owe this much in taxes," because there was no planning done, and they don't
Mhm.
understand the importance of being proactive in planning.
Mhm.
But what I
That's right,
find,
Karla.
yeah, that's exactly what I was going to say. That's exactly when I introduced them to Karla. And I
Mhm.
explained to them like how it's important to have a Karla in your corner, and not just like most of these women owners came from a corporate business structure, right? So they're used to a large wealth management company, and they didn't have that intimacy of a relationship. And it's very different when you're owning a business, and especially a small business, and it's important to have that relationship where you can actually email your wealth manager directly and talk to them and know, so they understand, they know what's going on in your business. You don't have to sit through a 45-minute meeting and remind them of everything that you talked about before, every quarter, every year, or whatever that case may be. But at the same time, they're never really planned outright for that spend, right, Karla?
Yeah.
Like the payment to you looks different to them because they're used to seeing it rolled into their management fees of whatever their
Right.
balance is.
Yep.
um and that's the first thing. I'm very upfront, and we all, that's why I enjoy the fact that we all work, we're very upfront with our fees and
Mhm.
very comprehensive with how we structure them. And when I know it's time for you to go to Karla, we have already talked to the budget for Karla's services. And you're going to pay for those services, whether it's a Karla or a large management company. So why not pay a person that you know is going to answer your call, is going to answer your email timely, and that you can actually meet with to talk about your personal financial management and
Mhm.
transitioning of your business and what that looks like. So, Carla, when they first come to you and we send them your way, what does that picture look like for them?
Yeah. So most of the women that I meet with have never worked with a wealth planner, financial planner, and their money is just scattered everywhere. And a lot of times they forget about their old 401ks that they've had from their corporate jobs. They don't have accounts open intentionally for certain money goals. And they also have no idea how to mitigate their tax exposure. And being a business owner, it's so important for us to have a intentional roadmap, as Kellé uses, uh, to build our wealth, because we're not in business for free. We are in business to create wealth for ourselves
Mhm.
and for our families, if that's something that's important to you, for charitable and philanthropy endeavors, if that's important. We are here to build wealth. And if we're just putting money into certain accounts with no intention, we're giving up our wealth building power. We're giving up our freedom to do what we want. And money is not a bad word. Money is
Mhm.
something that we should feel good about talking about. And when I start meeting with my clients, we have those discussions of, there is no shame, there is no guilt for not having these organized. Because when we transition from a 9 to 5 to an entrepreneur full time, there's a lot that's going on. We're focusing on surviving at first and building our business, but we can't forget about ourselves, because if we want to really build that business that we're hoping to build, we got to have it organized on the personal side. And one of the things, Kellé, that you talked about was the purchasing of a car, let's just say, okay, those are goals that my entrepreneurs have. And when we're discussing how to do that, it's not just on the business side, it affects you on the personal side as well as paying yourself. So when we're looking at how to pay ourselves, what do we take a distribution? Are we going to do a W-2 distribution? Like, what does that look like? And having projections of the future with the current tax laws, if the tax laws change, what inflation looks like, all of those things have to be taken into consideration. And so we start looking at your whole picture of wealth, and we break it down, and we create a personalized financial roadmap for you and your money goals. And there is no gatekeeping. You have to put all your money into an investment account. There are tons of different ways that you can build wealth. And that's what I'm here to do, to help you build wealth your way and in your vision, but keeping more money in your pocket and less going to fees and taxes. And you have to look at writing a check out to a professional like Kellé, Patrice, and I as an investment in yourself and your wealth building, and it is not an expense. It's a protection for you. So that's how I work with my clients, and that's what that looks like.
Yeah, I love that. I love that because it really is. I tell people all the time, when you invest in our areas, it really is an evergreen investment, because think about when we've invested in these areas in ourselves, it ends up impacting our children because we're telling them how to do the things we've learned in investing in services like ours. So it's something that never gets old. So as we begin to wrap, I'll come back to you, Tracy, and then we'll go to Karla. Give us one quick and maybe 1 minute, one actionable tip that our 7-figure woman business owner can take from today's session as it pertains to legal.
1 minute?
Have you met me? 1 minute.
All right. The one thing you should do, review my big thing. Well, two things. Review structure. If you had set this up when you first started, great. You may have, certain things in place, but make sure that where you started, the structure you had then aligns with where you are now and where you want to go. Right. That's the bigger piece in it. What are you thinking about doing? Like Karla, we sit, we talk, we do have these, existential types conversation. Where is it that you want to go and what you want to do, so we can plan accordingly? And then a bonus thing, look at your contracts. Those are the two pitfalls or two areas I see where people are just running, and they have not necessarily stopped to do the review. And it doesn't need to be a long thing, right? It can be something real quick, but having those two conversations definitely sets you up to just continue to grow and minimize your litigation risks as you're moving along. That was less than a minute, right?
Yeah, that was.
That was good.
All right.
Yeah. All right, Karla, your minute.
Okay,
it's up to you.
The number one thing that business owners need to think about is the intentional amount that they are paying themselves from their business. Review that. Make sure that the amount that you're paying yourself is the correct amount to reach your money goals, and reassess your money goals quarterly. Because if you have to go back and tell Kellé how much your business needs to pay you, then it might have to change with what your business marketing, is expenses, all of that. So you have to know exactly how much to the penny you need to be paying yourself personally.
I love that that was your tip, because mine is to review, actually look at those P&Ls and balance sheets monthly. Don't just put them away to bury. If you're an accountant, I call the inbox. The inbox is a place things go to die. At least that's where my inbox is. It is, because people oftentimes are not paying attention to their financials on a monthly basis. And if that's too much and unrealistic for you, then you need a fractional CFO, because the only way you're going to hit those money goals and know if you're on track to be able to continue the trajectory of the roadmap and the plan you have ahead is to have you or someone in your finances reviewing those statements monthly. So that would be my tip. And as we transition on, I want you guys to know there'll be far more of these episodes where the three of us are together to talk more about your finances, legal, and personal wealth, and share with you how to connect all of these three pieces and how they intersect together in your business. You can find out more information about each of us individually and how to contact us in the show notes. So go click there, visit us on our social media platforms. All of that can be found in the show notes. And until next time, we'll catch you the next episode. Bye now.
Bye.
Bye.